Yo, what's up? Let's go, chat. Let's go, everybody. So happy to have everybody here today on this rather eventful day. Study the illustration. Look at what we're looking at. This is a model. This is harmonics. This is my life. This is how it goes. How's everybody doing today? Great to see everyone. Crypto Clan Neon Klaus. Man, we don't want Klaus von Schwab in here, but hey, you're welcome. We know you're not the guy. Vlad, Ziggy, Will, Bob, Chef, Scotty, what's up, man? We haven't talked in a while. I need to catch up. Greg, Jordan, Nick, Miss Stephanie. Good morning. How are you? Jake, great to see everybody. Let's dive in. Dun, 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 dun. Okay. How's everyone doing? Are we hodling? What are we doing? How's your crypto position? Actually, we might even be able to get Mitch Ray in here in a little bit. Wanted to just let everyone know that, in light of the events unfolding, I was going to actually do a video. I couldn't get it set up. I want to show my face. I think it's time to stick my face with the charts. I'll probably ask Mitch to help me do that so you guys can get to know me a little bit better. The time has come to stop hiding, start getting out there. So you guys, maybe tomorrow I can get this fixed. I was going to try to do it today, stick my face where my mouth is, which is 88.6%. 88.6, folks. Get to know the number. You're going to learn about it very soon. Also, just to get the business out of the way, everybody, please, new, old, young, old, new, male, female, dog, cat, whatever you want to be a harmonic trader. Join, start your journey for free as a basic member. Get over to the basic members page once you have registered now. Then click on the basic members page and dive in. You have to get the software. Things are going to get real ugly. Most of you are not going to like what I have to say today, but you can survive. Listen, most of you, if you don't get this, take this seriously, I don't care what you do with your trading, you won't be here in a year. You won't survive. We need to survive. We come together. I want you to turn off the TV. I want you to turn off the talking heads. I want you to turn off Sailor, Pompliano, all the crypto, whatever, BitBoys of the world. It's done. You're always going to come back to charts. And you have to get to it. So get with Harmonic Pattern Collection software. Get with the free trials. And start there. And then get to the books. I know a lot of you don't like to read. But if you don't like to read, watch the videos. All here. And then subscribe. Please do not subscribe until you have taken advantage of all these free resources. Why? Because what happens is that people become knowledgeable, and then when they subscribe to get the premium services, for example, like today's Gold Members post of our new market update now available, please get with that. Okay? Get with our new update on for the June market report, because then you know you're going to get all the premium content and even the stuff that, today I'll cover crypto, but really what I'm talking about in today's monthly report is where we're going, where we are headed. I want to talk a little bit about Volume 2, Harmonic Trading Volume 2. All the harmonic pattern material, folks, was outlined in my 4 books. These 4 books, okay, from 1998 until 2016. That was the last book that I wrote. But it's free. There's a reason why it's free, because for me, I'm doing a service that most people don't want to do or won't do. You're not going to hear the Goldman Sachs people, the JP Morgan people give you the truth. And I want to deal in truth, because life has to be truth. Otherwise, we're kidding all of ourselves. Somebody go grab Do Kwon by the neck, please, and teach him some truth. Also, Binance, Celsius. Can't get your money? Are you at one of those brokerages and you can't get your money? Well, if you're at Coinbase or one of the other ones or Gemini, as I did, I wired out 99% of my money off of Coinbase. I will do the same on Gemini. I'm done with crypto, as I've been saying. Bitcoin at 24,000 is not a buy, folks. Bitcoin at 11,000, which is where it goes, the all-time 886. It's not a buy. Not a buy in terms of price, but time, and this has always been a time versus price argument. Whatever it can do within this summer, we're not even at the summer yet. We see what's happening. It's happening now. So I really want everyone to take it to heart. You want to do this. You have to do this. What choice do you have? How are you going to gain your freedom? How are you going to be able to better yourself, understand the markets? Listen, this is the nasty side. This is the dirty side of the hurricane. On the right side of the hurricane, we're all familiar with hurricanes down here, but let me tell you, this is where the acceleration begins, not ends. And so I think it's going to be a very hard lesson for many, many people to just accept the harmonic pattern framework. And I've been talking about that much the same way. Look at all of the sessions from the last few months. I think April, I really was exasperated with it all. Had enough. And then we did a stream with Mitch Ray on Thursday night where I dumped Chili's, I dumped Scale, I dumped Anchor, scratching out of attempted positions that didn't work. So where are you now? If we're going to look at these prior markets that everyone wants to cite, everyone loves to cite the bullish side of what it'll do. Oh, it did this, it did that on the upside last time, so it's got to go here. Well, it didn't go there. You never got your 100K on Bitcoin. Quite frankly, I've been really concerned since December, January, February, and then frustration mounting. My frustration is, for me, it was tough to bail. And I know it's tough to bail, especially when you got so many shillers out there. But this is the truth. And we're all going to reach max pain. And, these guys that say Bitcoin 1,000,000 or Bitcoin 0, you guys really are. You know why they say that? Because they have the money to lose. Even if they lose all their money, they're still going to walk into the sunset with 20, 50, $100 million. The regular people that staked their whatever, staked their life savings, staked their fiat. How's your fiat now? You love that fiat, right? I just think we have to be really active. There's going to be plenty of trading opportunities, but we're only trading. We do not want to hodl. You don't want to hold any market positions. We're all going to become day traders as we navigate through into the fall. Not only the season, the fall, but this massive bear market decline that has accelerated now. And we have measurements that back it up. That's what I want to focus on today, folks. Look, weekly charts on all of our indicators. We're working with Harmonic Pattern Collection for TradingView. Everyone in here should be getting this program. It's really easy to get the program, folks. Send your username to support. Okay, right there. Send it to hpc@sr-analyst.com. The greatest programmer in the world, my buddy partner Chris, is going to take care of you, give you 14 days. Here's how it goes. If you want 14 days, you get the first trial. If at the end of the 14 days you want another 14, you have to ask. But if you just ask, you shall receive. That's how it works. So how do you navigate? What are you guys going to do here? Ladies, gentlemen, what are we going to do? Where does this go? What if you're in a position, or what if you want to take a position? You need to get super short term and then basically go off 5-minute charts here. and look for these bounces. Look for, I mean, look here, even on the Bitcoin overnight. Look, there's your last bearish bat pattern. We have a crab pattern that got overextended now on the 5 minute. It'll probably do something like this up to type 1 and then back down and keep getting rejected. We're in liquidation phase. There's no way to avoid it. Describe it. Also, remember the deep crab pattern that I was talking about on the daily? Of really forever frustratingly saying this is a real problem, this non-event, and then last week with HSI coming counter to the bullish pattern. What did I say? I said it goes to the hop. So if you want to know where this is going right now, 19,718 is the hop level on this crab pattern. I don't even want to think about it until then. We have to get sharp. Folks, you're going to have to turn off basically all of your TV sources, all of your talking heads. I mean, even look, okay, I went on a Twitter spree over the weekend. Do check out those tweets, but look, this is, if this isn't show you that, folks, you guys know more than most. If you're in here doing this, and then you know more than most. Okay, and you understand harmonics, the harmonic pattern framework, you're doing more than most and know more than most. And where's the Kramer tweet? Where it is. Here we go. The man himself, Jim Cramer. This is what your talking heads are going to give you. Market frantically trying to bottom. So for the first time in ages, we're buying for some of our CNBC investing club. Whatever, Jim. We'll wait for these old boomers to go away, because that's a sell sign. Every time that guy's going to be posting stuff, I'm sorry. I can't shut up anymore. I can't not go after this obvious garbage. And this guy's mainstream, millions of dollars with a big following, big whatever. Please go away. We're done with these people. All of them. I mean, all of them. All of them. And I've just had it. I can't, as somebody that's been involved with this market for as long as I had, to see the level of garbage, of of absolute shill nil. It just doesn't sit well with me. And I love the market, folks, but we have a real bad environment. That it's not political, it's not personal, Sonny. It's not personal. It's business. If you know what that movie is, you know what that, everyone knows what that movie is. And I want to be clear about this, folks, that you are halfway through the decline. You're not near a bottom. And for God's sakes, if Sailor or any one of these others start saying they're going to buy more, sell it. Just sell it. Just, buy the, for those that can do the spread trading, okay, that you guys, I know some of you in the UK and whatever, just, hey, is it going to be under 15K by the fall? Yeah. 11K by the fall? Likely. Wait for a little bounce. Maybe we come back to 25K or something, but this thing is toast. And we can just look, static support that everyone looks at, static support that everyone looks at, fill the gap. We know it's a BAM. We know it's a bat action magnet move. Oh, cool. Brad's in here. Hey, Brad, what's up? Mitch is in here. What's up, Mitch? We'll get Mitch in here in a second. Mitch and Brad, we're going to do August meetup in Miami? Let's see. Maybe gas will be $7 a gallon by then. Who knows? We'll bring Mitch in a few moments. But the big one, folks, that probably the other charts that need to be thoroughly addressed is, Ethereum's trying to bounce off of 1100. Well, I don't buy it. Let it bounce. Let it do whatever. You're 12 weeks in a row down. Ethereum's either 786 or probably 886. And folks, that's 630, 650, 680. It's under 700. It's another 50% drop. So I can't emphasize enough that there's no opportunity here. If you have staked, I'm sorry. And it's not only going to be an ugly summer, but as we have seen and I outlined last week, okay, you're in acceleration phase to the downside. You're not even in stabilization phase. Stabilization phase could take you up to a year, year and a half. Meanwhile, your money, your capital smolders and you can't get it out. And you get crypto influencers who are shameless. Look, this makes Enron look like donuts. I really I despise those people that try to basically manipulate the integrity of the market. Guy like Bernie Madoff should probably have been executed. Other people that pull these blatant scams. And then these other people that are professionals or so-called professionals that shill, they're just talking their book, which is what every major street firm on the street does. Nobody's going to come out and say this. Nobody's going to come out and say what I'm telling you, folks. You have to accept the framework. MW pattern framework, folks. My decades of research has made me follow this like, like the 24 hours in a day, like a clock, or 7 days a week, 365 and a quarter days a year. Okay? This framework is immutable. And when you get 4 of the 5 points and you get into that CD acceleration leg, there's only one place to go. I just think that it's something where until you see the major patterns, and for us, we can just wait on harmonic pattern collection. That's what I'm going to wait on. Someone's saying on the Coinbase feed, there's a pattern. I don't believe it. There's a pattern. It's at 11,000. 11,000. I don't want anything. I don't want to deal with any of it. And I don't want to participate. I moved it out. I'm out. I'm out. Not looking for opportunity here. I'm looking for. This is going to be great trading action. Don't get me wrong. Don't think it's not. There's not going to be opportunity here. There's always opportunity. The volatility needs to expand. But crypto hodlers, crypto hopers, hopium. Look, folks, there's 2 places that I'm looking at for Bitcoin to finish up on this, and I want to go to total too. Okay, we know about the 886. The 886 essentially all time is like this, and I've been tracing out that bat pattern across the board on total crypto and what have you. All-time 886 is somewhere around, really, all-time 886 is 9,000, 8,000. If you go off the 2020 low, which is now the COVID full reset, that's the other thing. The COVID harmonic full reset is at hand with that kind of minimum target. 886, 11,323. 11,323 gets you to a framework minimum. Think about it this way. This is a massive distribution curve. On the way up, topped out, come down on the downside, okay? And the way distribution curves are is that, about 10% of this confidence interval, these people capture the massive low opportunity, but the bulk of the people are going to be in this area. From here, basically from here to here is where the bulk of the activity is going to happen. And then you get to the downside, this last 10%, okay, that's where the rest of it gets flushed out. And we complete the cycle. From a harmonic perspective, folks. Something that's always troubled me, I've always wondered about, that we had this beautiful bat pattern way back weekly at the low in 2008. You come back, you retest it for the type 2, but what about that little guy? Does that have to get retested? Maybe. Maybe that bat pattern has to get retested at 4,500. I'm for, without a doubt, I won't even think about Bitcoin to 11,000, but maybe we retest this. That's how bad it is. And we don't see any help. We don't see any. What is going to come save this market, folks? That's the other thing you got to ask yourself. What, Celsius and now Binance? You're gonna hold your withdrawals? Look, I had a couple $100,000 in these accounts and had to drain it out. There's no FDIC backup insurance. These people can do whatever they want, as Do Kwon has showed us, and other people like I won't even mention Mr. Gooch. And now the most reputable of them all, the Binance CZ, whatever his name is. I'm sorry, man, you can't do that to your investors. You have to have contingency plans. Here's Binance on the weekly, on their own feed. Binance coin, go on back. And there's no pattern here. Why? Because that is a prior low from there. So really, it's kind of this super funky Gartley that's not even a Gartley. It's like an 886, 70 level, ABCD. Binance coin, $82. Yeah, it's just not. Look, we're not, it's going to take time. This stuff, the bear markets can be really scary, okay, and then give you a little touch of hope. And like maybe it's over. Ooh, I don't want to miss out because we're already down 50%. So that's got to be a massive buy, correctional buy. It's oversold. No, it's not. It's oversold, getting worse. Let's look at HSI, folks. HSI, Harmonic Strength Index, the other advantage of having the software that no one else has. Even, there's a lot of people that are, other than Mitch. Mitch raised the tops in terms of anybody else doing harmonic patterns. He's the only guy I would ever listen to. Okay, but anyone else doing harmonic patterns are floating garbage. There's a couple good people that I'm starting to encounter that are not speaking English doing it, but most of the other people have no clue about this stuff. And why does HSI work? Because it does. There's the metrics relate to the patterns, the average action, the importance of indicator extremes. And what do we see now on a new week, expanding into oversold deeply? Yes, this will probably register your deepest reading ever. But as it does that, you get a mass acceleration into the oversold extreme that happens, and I've said this many times, in a serial fashion, bar over bar, lower, lower, lower. We could spend another 6 weeks lower, lower, lower. Folks, I'm not answering questions today. And unless you're a gold or silver member, and that's going to be a new policy that Miss Stephanie will start to enforce, that gold, silver members, you guys can ask questions during these sessions. If you want to subscribe, go to harmonictrader.com. I'm not going to shill it. Just, you guys know what to do. You guys, folks, please take the time to invest in yourself with learning what's going on here. Okay, they laughed at us in in the year 2000. They laughed at me for the harmonics, and then by 2002 I was proven right, and I was only looking for NASDAQ to go to 2,800. Now we got crypto, Binance 80, Ethereum 680, Bitcoin 11K, total crypto market cap. Let's get to that. Total crypto market cap is going to implode. Why? Some of these are just going to go out. They're going to go out of business entirely. You're going to do Do Kwon times 10. Okay, total crypto market cap 886. I have basically 450 billion. You're now under a trillion. I have said for months, under 1.09 trillion, it's over. James is a gold member. James, you can ask me anything you want, my man. And how's it going anyway? James is a guy that has moved on to be a full-time trader. He had to quit his job because they're getting forced to take a stupid vaccine that doesn't work, and they pushed him out of his job. And he said, "Screw it, I'm going to go trade," and he's done well. And my man, anything I can do for you as a member, I'm here. Look, it doesn't give me any value to try to shill my services or whatever. You guys don't see me shilling some kind. Hey, get a Bybit 10% rebate if you open an account. The last thing I would tell anybody right now is open a crypto account. There's just nothing that that if any of your influencers are offering some kind of crypto account bonus, run. Mitch Ray, he's totally crowdsourced. And I respect the hell out of that guy for doing what he does. He did an amazing stream last night. Yet James Hetfield of Metallica, he quit Metallica and he's now a trader. All the best on your recent issues, though. Damn it, what do I need to do? Break another glass? Do I need to pull out the doers? It's 12:30. Mitch, do we need to start drinking? Because I absolutely feel like it's one of those days. One of those days. And people are saying that, I saw some guy early this morning on CNBC from Goldman saying, oh, we only want to talk about our top picks. Your top picks are garbage because the whole system is breaking down. It's breaking down. In Bitcoin, okay, and this is the next story that's going to fall, is that all of these Bitcoin loans are going to get called in. That's how you flush. It's going to be a massive crypto margin call if it's not already. Once you get that and you hear that on the news, you'll hear it here. You'll hear it first before you hear it anywhere else. Okay? That's how this thing crashes. And then you get more stuff like Binance and Celsius and eventually Coinbase saying, sorry guys, we had to turn off our withdrawal. We didn't bring Mitch in yet. We're going to get Mitch in 2 more minutes. 2 more minutes. I got to rant. I need to get this through to everyone. We have to, look, you got to survive. You got to live. Okay? And I'm not saying even jump in right now. Today's a pretty nasty day. Okay? But we need to get ready. We're going to get a counter rally. You're going to get some movement. You're going to get people like, all right, we're better now. No, because we're just halfway there. We're halfway through the crash. We're not even all the way. I mean, here's my last chart. Mitch, I'll dial you in a second. Okay, Bitcoin futures. This is how they're going to do it. I think this was always the plan too. All right. Oh, all those guys. Gary Gensler. Jordan saying Gary Gensler. Gary Gensler is, you know what? Power is quite as they say, an elixir. Absolute power is the ultimate elixir. And that's what happened to Gensler. He got in there and be like, oh, I can rewrite everything. Oh, I'm your friend, crypto. No, you're not. Folks, the crypto all-time futures chart, 886, is at 10,000. Okay? If all-time 886. You have to just accept this. And so no, this is not a buy, and this is not even something where there's constructive bullish action. You might get lucky and come back and fill that gap at 28,000, and then Michael Saylor would be like, oh, I bought another 1,000 with the money I borrowed. See, this is the other thing that we all don't have advantage of. We're not tapped into the New York banks. where we can get 100, 300, 500 million. Yeah, I need a little more. You got a little more? Oh yeah, well, I'll take your 500 million. I'll pocket 5 million for myself so that I'll store that away in Switzerland or somewhere like that. And then I'll be fine if, no matter what. It's like this, folks. Until you're to the right of this trend line, you do nothing. And you still don't do anything until we get a massive pattern. For those of you that are still in the crypto market, take it to heart. You need to look at yourself. If you invested too much, and I'm overinvested. I've overinvested too much. Mitch has got those great sound effects. We are only halfway through with the stocks. Let me give them a quick rundown on the stocks. Oh, you know what, Mitch? Hold on one second, man. All I need to do is go to my Twitter feed. Okay, and all of these get posted to Discord. That's the way to go, I personally think. But, here we go. These are the charts you need to look at, and this was posted on the 10th. All right, this is everything, folks. So this is the NASDAQ going back from the 2000 bear market. We have break-in. This is the BAM, bat action magnet move. Why? That's a massive bat pattern. And then this. And we are here. Starting. Next leg is just starting. And these are minimum targets. More on that in a second. Let me bring in my man. Are you ready? Mitch Ray. Mitch, that was a great chat we did on Thursday night. It was hilarious. Really enjoying it. I got to say, Mitch has kind of brought some of the fun back for me, and I really do like it. It's look, everything that we do has to be fun. If it's not fun, what are we doing? Quite frankly. And I appreciate that. I know a lot of you are here from Mitch's community, and I appreciate you folks. So let's see. Let's get him. Oh, wait, hold on. I can't hear you. Hold on one second. Let me check here. There he is.
How's it
Talk.
going?
Everyone, the man that just got off a 5-hour stream last night is back here to talk to us. Mitch Ray. Say,
Scott, can you hear me?
I can hear you. Can you hear me?
Awesome. Yes, I can. I remember last time it was weird. So just want to make sure. Yeah, man, and lack of sleep, man. I'm like a zombie right now, but these markets just been keeping me up and it's just I don't know, man. It's like I don't know, like 3.5 weeks of nothing, and now we're getting stuff and it's like I'll take it. I'll take the price action. So yeah, pretty interesting last night. I mean, how could you sleep through that? I mean, maybe you did, maybe some other people did. I didn't sleep through much of that. It was crazy watching it all unfold where Bitcoin hit its measure move, exceeded it. Ethereum hit its measure move, exceeded it. Ethereum hit the 200-week moving average for the first time since July of 2020. Late last night, my alert went off, and the alerts going off like that. I mean, you know,
They were clicking left and right. I stopped in last night for a little while, and boy, it was one after another. And I think Ethereum.
nonstop.
Oh, I did see that Ethereum delayed their upgrade. That was another. I mean, it's
Oh,
been
they did.
perfect storm. I saw that. I don't know. Maybe someone else can uh, comment on that. But I did see something where Ethereum that the 2.0 is delayed again, and I think it's all smoke and mirrors. I don't think you can believe these guys anymore. You can't either when you have people like the Do Kwans of the world, and you have other these shysters that have pulled these scams before, and nothing happens to them. And then Ethereum with everything that its failures and failure to deliver. I just you have to look at those people as like the same way you look at Madoff type people that Even the YouTube influencers, the BitBoys of the world that are just shamelessly nonstop. Oh, this is the future, whatever. But at what price? Like not 20,000, not 30,000. Where do you think this goes? I know you're not a target guy. You're pure analysis, but where what do you think? Where do you think this does this go all the way back to the 100% retracement? Like
What, Bitcoin or Ethereum?
Bitcoin, Ethereum, do we go back to Bitcoin 4,000? Do we go back to Ethereum 200 or 150? I mean,
It's so hard to say, but I'm just thinking that I just don't see how 1200 really holds, man. It's not even a real support. I mean, what is a support? I think like 1730 was a real support, and 2000 was kind of a support, but not really. I mean, I think a real support's like 420. Um, well, how deep are we right now? What's the
we're
what are we at right now? Like from the
$12.38. You know what? You had a great
well, like
point. Great point.
786. We're right around the 786, 1127. So I mean, you're starting to get there, but with very little to no support backing you up, and the fact that the index funds are doing what they're doing, there's no support where the index funds are. So that's all you need to know. With the volatility index at its highest level since what, early May? What are we? What, we hit a high of 34.55. Yeah, I mean, like, I just, with the VIX that high and elevated, I just don't know how you can want to even think about dipping into this market yet. It's just crazy. It's so bad. And the fundamentals are awful too. Um, yeah, and yeah, you're getting to a point where things are breaking. They're breaking, man. Bank runs in crypto.
I
And
agree.
it's because, yeah, I mean, there's like an experimentation they had, and they're like, oh my God, everyone's trying to pull their money out, and we're realizing we don't have the money to pay everyone if they pull it all out. It's like 1929, but on crypto.
Well,
So I just, yeah, it's,
our stream Thursday night, like maybe it was the booze. Maybe it was the breaking of the glass, which is always a cathartic thing. But I dumped that Chili's at 1178. I had 125,000 of those off of
yeah.
this daily crab that hey, and this is something with harmonic patterns, folks, that is a very important management technique. That the beauty of harmonic patterns is they're going to be reactive, but how much of a reaction, again, that's where your 30 bar window comes into play. And I just was, it was a yelling at myself as much as yelling at the screen of like, Scott, take action, respond, don't sit on your hands. And that's why after, sitting on that, I mean, caught that pretty flush on that first down move, but then you and I were talking about it, and you're like, come on, this thing's going to 3 cents. What are you doing? I'm like, yeah, why am I holding 125,000 of this garbage? And I dumped it, and I can label it. It was like right,
What,
amazing.
12 cents? Yeah, it's down 30% since you sold it.
Yeah, it was Thursday night was like here, and yeah, that was it. For me, there was no action in there. 1178. Where's 1178? It was like in here somewhere. And I just,
Yeah, it was just like you sold it, and then Friday, Saturday, Sunday, and today just destroyed. Like it just started getting real bad. But now it's like, whoa, holding on to 9 cents, which isn't. I don't even know why I have a trend line there. It's not even a support. It's just its support is the local low from May 12th, and I mean I think it's eventually going to 2 cents. 2 cents easy. Why not? Why would it not? It's a literal digital beanie baby.
yeah,
You go to Little Gatlinburg, you buy it, and you have it, and no one cares. So yeah,
and
uh,
with no use and no, I mean, listen, I did look in this a while ago of like, that they would be digital tickets or digital this. All, everything that you have been told about crypto is a lie. I'm sorry, but it is. There's no use case for Bitcoin. A lot of these little digital JPEG things that they're claiming to be the future of whatever is just gone. I mean, there's no value there. You can't eat these things. And we are getting to that environment. I'm going to jump over to the markets in a couple moments here, but I want to thrash crypto enough thoroughly just so that I can be clear once and for all that from a harmonic pattern perspective, every pattern that has materialized on the downside for me will either need to go an all-time 886 or go to a hop level harmonic optimal price as minimum target. So if you're looking at Chili's at 9.6 cents thinking maybe that's an opportunity. No, you're another 50% lower from 9 cents to 5 cents until it's a buy. Or before I would even think about it if it was
Look at
any,
it again. Yeah.
yeah, before it was even any other asset class. And I think we need to come to Doge and
Uh,
thrash Doge a little bit I got a lot of garbage. I got a lot of flack for and go to my Twitter feed everything. That was where Elon was doing Saturday Night Live on my Twitter feed a year ago. Just check it out. I won't even bring it up now, but I was saying I was out of Doge before he got on there because there was so many signs. I had some patterns there too, but what I think is going to happen in the long run is look, Elon's going to get vilified for this and people are not going to be happy because Doge will go back to a penny. It will go back
yeah,
to
you know,
1 cent. What's that?
speaking of Elon, his Tesla on their balance sheet, the Bitcoin on their balance sheet's down $330 million right now. So they got that going for them. Yikes.
Yeah, and that's the start. I mean, that's just the start of it because I don't. It has the concept. These are concept technologies that have failed. I have personally lived through this, traded through this. This is for me where we are. We're dot com. We are 2008. That's yet to be. I don't know if anyone ever saw the other story about the fact that mortgage-backed securities have no bid.
Yeah.
Italian bonds, no bid. These things are losing their markets like they did in 2008, although it hasn't hit. Um, with a flare of 1929, and it's a culmination of me of everything that I've learned, and then the mentors that I have been grateful to share knowledge. They shared their knowledge, and I just speak to about one guy that I'll post later today about this guy. His name is Paul Desmond. He ran the largest or the oldest technical analysis firm, and he was a personal friend of Paul Tudor Jones, and Paul Tudor Jones was his client. Okay, and Paul did amazing work. Lowry's Reports is the name of the firm. Paul has since passed away, but my last conversation with Paul, I spent 3 hours in his office, and he laid out the entire scenario of why the next crash would be 29. And he told me that once it does bust, and this is 2015, before Trump, 2015, he was extremely worried at that point, thinking we've got about 2 or 3 year window here where this will happen, and it got extended out. But he said when it does pop, he thought 80, 89, 90% correction across the board. This is a guy that had been staring at markets since the 60s, and this has always hung with me, and that's why I do see a lot of the writing on the wall where we're not, from a harmonic perspective, and I'll always stick to those measurements, you're maybe halfway there to your minimums, but on a larger scale of you put together the fundamental issues, the insane financial condition this country's in, the United States, with high debt, crazy debt to deep GDP ratios. You don't need to know much about it other than know that these are all historic extremes. Credit, now will come the delinquencies and the bankruptcies. That's your next phase. That's what comes in the next 6 months with a lot of the companies that what we need to see now, after we see the big red candles, that we need to see bankruptcies. And that's what's coming. Hate to say it.
Yeah. And currently we got hiring freezes and layoffs occurring all over, all sectors. And just speaking of, losses in Bitcoin, you got to think about, I think now El Salvador, I think they bought their first Bitcoin purchase a little over a year ago, June 5th or something, and they're down like 50% now.
Yeah, and they don't
They
have.
bought they bought like 45 plus K. I think that's their average. Really bad. I don't know. I mean, that's just what do you do, man? What do you do when you're a country, a sovereign country, and you're down that much? I mean, maybe it doesn't matter, but that's not a good look, man. That's not gonna. What's happening now is not gonna make other countries adopt now. That just killed it. It was an
Yeah.
experimentation and it failed, I think, for now.
Well, just ask our mayor down here how his Miami coin is
Oh
doing.
God, he got
Down
obliterated, right?
95%. Yeah.
Yeah,
And
all
so
the crypto is going to do that.
yeah, I do. I think you have to accept that. And it's here's the other thing that I posted that directly from the Fed. Where'd it go? Directly from the Fed here of from their website about they were talking about the 29 crash. And interestingly enough, look, 88.6%. It's a reason why it works. Historically, we've seen it before. And here, this is directly from the Federal Reserve History's website. Okay, that the 29 crash, you had a down 10%, 13% on the 28th. It was down 12 the next, and that was only the beginning of it. And then you eventually had an 88.6%. Here's the chart. Okay, this is the 29 crash right here, and that. Let me see if I can improve that, get that blown up. No, it won't blow up for me. I'll do it this way. Um, this is pretty much what you need to understand that the crash is only the first leg. And so we're doing that
Yeah,
now, and then the backside. Everyone knows about 29, okay, but they don't realize that the full 89% correction, 88.6, 88.6, has to take. It
it was
could
a
take.
hundred, right?
It was 89 high to low. I mean a full off that full
Oh,
move.
okay. I just mean like from the previous low to high, it looks like a 110, 113 almost, you know?
It was all-time correction though. It was
Hmm.
88.6, and there's a reason why that works. And the other thing is that it took decades to recover. And this was the other thing. So the 29 crash started in 29. You didn't recover until 54. So you went through a world war, a couple of wars, whole bunch of massive inflation, until you finally got this thing turned around. And I think you got to look at this next 2 years of what we're dealing with currently. Of looking for hope in our political system and policy, which is the other thing that people don't understand is that look about I think it's like 60% of the economic spending and consumption is actually by the government. And I'd like to double check those figures so they're accurate. But I know that a large percentage of the economic consumption is by the government. And so the government's here consuming. They can pay any price they want. They squeeze us, the normal people, the regular people out. And they're not going to stop. They're going to outbid you for your oil and for your other food. And then some of the stuff that they've done, like upping the ethanol mandate for crude oil, that just less food. So we have to get into the mindset that an anticipatory mindset that this is still early stages here where we haven't seen the massive reversals. Speaking of reversal, at least crude oil's coming back here. And I do think energy is one of the places to hide for now of what things that companies that make
Jeez.
things that's actually not bad right there.
Yeah, that's a really, really nice recovery right there. Good Lord. Go figure there, right? The one chart that's terrible for normal people, right? It's just, you know, most Americans are not long US oil, so the spot price of US oil. But
No.
hey, gasoline prices though heavily correlated to this. And how's it doing today? Uh, it's only down. It's still down like 1.25%. If you look at the RB gasoline futures price, though, look at that recovery. My God, hit 397 and now it's at 412. What? Yeah. Oh
What's
man,
that?
look at that
RB9.
yeah, RB1, and it's bullish divergence now on the 4 hour MACD histogram. Crazy.
Let me check the other.
That's just
Go to the Trading View platform.
Yeah, it's just a chart I look at now. I don't know. I mean, it's just somewhat different, but I guess this is the chart where, you know, the pump, you're checking the price of the pump.
Yeah, there you go. There's RBOB. Nice deep. There's deep crab there on the hourly, which is that still should give you type one, then come back for a two. Um, there's the 4 hour, and what's the daily look like? The daily's topped
Yeah,
out. I look. I do have some bearish patterns on crude
does
oil.
look tired. Yeah, the
That's
divergence, bearish divergence on the daily. But again, the trend's so strong, man. Like natural gas showed quadruple bearish divergence. It's a fundamental issue.
you
There's like something going on with the fundamentals. I mean, that's so overwhelming that the technicals, like any kind of bearish technicals, are just failing, not playing out.
My concern is, though, that this will spread to crude oil energy because of demand crunch, that they're going to kill the demand. And that
Yeah, for
I've
sure.
got, and I have patterns here. This is my issue with crude oil at the moment. I do have bearish patterns here that say we should pause. And this is just, that would be the final capitulation phase of the downside of the dirty side of the hurricane, where the premium comes out of the commodities because we're entering recession, less consumption, demand destruction, which is, again, it's tough for me to buy up here on UNG, and based on what we have
Of
seen.
course, yeah. It's irrational, man. It's psycho. It's like the epitome of what you shouldn't do. You're just buying high. You're buying at premium levels, even if it worked out. You're not doing it right because, like, maybe this time because of the fundamentals being insane, but that's when you start developing bad habits where you start all of a sudden. So where's it stop? If you start buying high on natural gas, you can start buying high on Bitcoin or some other asset or some other individual stock. It's like you try to be disciplined, and no matter what the asset is, and you can find value in uptrends. So you'll still be probably paying premium, but UNG hasn't pulled back. It's
No,
just up there, elevated. So. I get it. Yeah, of course. It could go to, $10. It probably will. It probably will go to 15. But I don't know, man. That's fine if you were long at much lower prices and you're letting it ride, but to take fresh longs,
no.
it goes against everything we try to teach, I think. So,
Here's USO chart on the daily, and I have a beautiful deep crab. We're 6 days into the reaction. We did get confirmation back on was the 7th, and we have a couple of days here with some vacillation. I would be maybe looking at that if you're long energy. I think maybe lighten up a little bit, because I think if anything, volatility is going to come in here across the markets and at least give you reactions where, hey, if you're not long energy yet, you're probably going to get an opportunity to do so uh, after some kind of pullback off the deep crab. I'd never want to be a buyer at a bearish 1618 extension. Uh, you know,
yeah, it's crazy.
yeah, that's a
Even if it keeps going, man, it's just like crazy.
yeah. I
I don't
would
know. I mean, you'll get like a flag. You might get a bull flag. Like you could look at like PayPal that had like the inverse of this chart, literally the inverse, where it was in a downtrend. It showed the bullish butterfly, bullish crab, and at the pattern completion zone at that 1618, it just bear flagged for a month and a half, 2 months, and it started becoming very apparent the consolidation structure. And then it's like, if it's doing that, it's probably going to roll over. So you could say maybe on U.S. oil, if it bull flags for like a month or two up here, then you know that the pattern might very well just be a pause, like you say, and then it breaks upward again and continues on.
I wouldn't want to look at crude oil until we got maybe back down on USO around 84, maybe on the spot price. That's a little bit lower. That's these are big these are big numbers, and again, it doesn't mean that crude oil won't do the massive stagflation move to 250, 265, which I think eventually will happen, but you're going to have corrections along the way, and I would rather be patient on that than to jump and say, all right, crude oil is just going to explode. No, I think we have to get defensive on energy. I think we're talking about a full-on asset deflation. Okay, not inflation, but asset deflation, where you got consumer price inflation, but assets are going to get their butts kicked. I
Yeah, I
just
posted you that. Sorry. Yeah, my bad.
oh go ahead. What'd you post?
No, I try to, when you pause, it's like, I was just showing the PayPal chart, like a good example of like maybe what we could see if things are insane on US oil and it was going to keep going from here. You might want to look at the consolidation that you got on PayPal. Like I posted it in the DM or
Nice.
whatever.
Here's Mitch's chart on PayPal, which is still breaking down
Hmm.
new lows.
It's
There,
not,
th-
yeah, it's like where it's at now. It's not even relevant. It's so bad, dude. God, I mean, once it breaks $72, dude, it's done. It's going to $42. You know, the downside is it's like an S coin. PayPal when it breaks $72, people that are out there, you got a 41 to 42% downside, and it wouldn't be weird. It would actually be weird if it didn't go to 42 when it broke $72.
Let me bring that up on the pattern collection because I agree. And what I think about what are the reasons. And again, I don't want to ever make my I want to make my investment decisions, my trading decisions based on metrics, not fundamental reasons. But this Bitcoin loan liquidation scenario is could very well be one of the things that knocks the snot out of all of these, where your Square, your BlockFi, your Block,
Yeah, dude.
all of them are, that's what's fundamentally driving behind this, where people are not going to be able to pay these bills. They're not going to pay those loans, or those loans are going to about to get called in and liquidated. And then everyone's going to rush to sell the Bitcoin to basically cover the debt. This is where, when you get into this phase, okay, and we're gonna get into the second leg. We're halfway through the bear market, kids.
2000, baby.
Yeah,
2000.
2000. I think it's a combination of 2000, 2008. We need to see
And
those,
74.
and 74 with a gloss of 29 that will stretch it for 2 more years, because Brando won't get out until November of 2024. He's not going to do anything until 2024 till he gets out, and that's an ugly scenario. At least Carter tried to do
Yeah,
things
man.
about the energy crisis. Brando's making this worse. All time 886.
Intentionally, yeah.
Yeah, all time 886 on PayPal. Minimum $61. Book it and
Doesn't
hit.
even make sense looking left.
Nope.
Doesn't even make sense.
Nope. Where it makes sense with all of these is a full 100%, uh, just a 100% reset, retest of the IPO lows, which is something that, again, the further you get into this, when you see PayPal, which was supposed to be the future of whatever, and has crashed like this, well, then you can extrapolate that to even your biggest, best stocks like Facebook, Meta. No wonder they're going to change their name, because you wouldn't want. Oh, they changed it already. The Meta is the symbol
Yeah, dude.
there, but you can try to change it. But look, Facebook, and I'll forever call this Facebook. I'll never respect that dude.
Yeah, dude. Don't call it. Don't do it, man.
886.
Don't call it meta. I think
No.
it's like it's like appropriation, dude. They're appropriating something they had nothing to do with. They're just stealing it because they're like, hey, we have this cash and we don't know what to do with it. We had this great idea in 2005 and we've done literally nothing. But we have money, so I guess we're gonna go into the metaverse and the metaverse crashes. And look at them now; they're getting destroyed. So
886, $59.
easy, man. Easy.
Netflix, it's over. 886.
Yeah.
and it failed the shark. Look at that. It had a shark, beautiful
Oh
crab at the
God.
top. But I'm only interested in, then this is what I will be thinking. I'll be hoping for some kind of snot rally, but to be able to catch this. But I think the way to be playing with these is to just buy some stupid out of the money puts. It's all going to be about timing, but I think it happens between
Oh,
now and
it's so nasty.
October. So you've got like a 4 month window. In the next month, if we can get a 2 3 day rally, but I mean, I haven't seen anything, but maybe in the next few weeks, if we can get some kind of just dumb rally, that maybe what the play is like, okay, give me the 100 put on Netflix that's trading for a buck or something, and like a lottery ticket style. I would never say this. I would never say this, especially after this thing's down
Yeah,
70%.
so much.
But like a magnet and a serial down move, serial continuation, $75 at the 886 for Netflix. And then you go across the board with all of these that have, I think the banks are probably vulnerable because people haven't woken up to the fact. They say, oh, the consumer's fine. The banks, they passed their liquidity test. Every one of these banks, I want folks to be targeting 886s off the COVID low, which again, as more information comes out about that whole COVID thing, the more real truth we learn that much like JP Morgan here, okay, 886 at
But
88 bucks
signature.
by October. By October. And then take a look. But what I'm looking for is a generational low at the end of this, but that might be a year or 2 years from now. So take it for whatever you folks want to take it as. I can't emphasize enough just the simple metrics when I connect dots. And this is something that I learned early on, that if you can connect the dots and you can draw the retracements and they match up, it sometimes can be inconceivable, but that's where it goes. That's what you end up dealing with. And if we are in that environment, which Damon Diamond thinks so, okay, then we start to go back, and you have to go all the way back to 2010 when this all started. Of what I mean, we're just talking. You're in terms of J.P. Morgan, okay. We've only given back 18 months of paper progress, and so if we all can agree, and I think we all can agree, that this is paper fluff. The last 2 years, much like the dot com in 2000, was all artificially generated returns that we have to complete the distribution curve back to 886 minimum. But I'm really thinking more so of like, come all the way back down. Go to $30 JP Morgan from 116. And the only way that I would play that, and the way that I'm thinking that, okay, how do we get opportunities on this? We go with the puts. We go with the out of the money puts. Maybe we get a rally. Maybe a rally's 1,000 or something. Go to your 5 minute chart. What's that looks like? Look at this breakdown on a 5 minute. Just the last this month. This is June. On a 5 minute chart, that's devastation. Pure devastation on J.P. Morgan. There's too much going on here. That's what I want.
There's so many banks that look like this, like Signature Bank, SBNY. Like, dude, it's already a Head and Shoulders. It's played out all the way. It rallied and it's just crashing again. There's so many things that look so bad. My God. Like I'm just
Whoa.
kind of space barring, scanning a little
Yeah.
bit while, and it's just, oh, it's terrible. Like Taylor Morrison, which is what the home building, it's collapsing. It's below a critical support back from 2013, 2017, 2018, 19, 20. It's like literally the support resistance. It's done. It's over. Um, my God, man. Yes, but Signature is just look at that thing, man. It
Yeah,
was so
that's
perfect at the top, though.
oh, it was so perfect. It was probably a concept Bitcoin loan stock. But here's the thing from harmonic pattern perspective,
Yeah,
folks.
really.
This is going to do what I call a looping type 2. I can't explain it. It's just from years of research, folks. Harmonic patterns love to get retested. This one did a massive reaction, came all, did this kind of a thing. But hey, look, to come all the way back down and hit the 886 at 74, and this is anything. It's a uniform application of the harmonic knowledge that there is a very good likely, and I would use that pattern as a target on something like this. Like if you can just do an 886 off that COVID low, go for it. Otherwise, some kind of pattern that has to get retested, things like that. Here's some of the bigger names like Bank of America. All right, these have yet to fall. And look at the pattern. Just look at that weekly, man. The crab pattern on Bank of America, right at the top. That's your marker. And you did a type 1, type 2, which is kind of difficult to see on this one, but you have completed these 1-2s on Bank of America. There's your first reaction. Come back for the retest, and now all the way down and straight through target 2 without stopping. So all you need to do is ride these trend lines. And if you get these mini reactions up against the trend line and back down, smack it. When you do fail, you kick it up to the higher time frame. And for all of them, the higher time frame across the board are these 886s off the COVID low. I think every stock, every
Type
market
two.
that isn't there yet will go there. As a 22 bucks is right. I think there's, a lot to be said for just respecting cycles, respecting that the markets have done this before. You and I on Thursday night were looking at Apple, and Apple
Oh
was,
yeah.
had gone through this. Well, Apple hasn't even begun to fall. Apple
Yeah, it's
trying to rally.
oh dude, it's in outer space though. It doesn't matter if it rallies or not. It wouldn't be weird if it goes up to 136, 137, but if it's below 136, 137, it's going to 125 soon, and that's what's going to help drive the market down. Yeah, dude. This is just makes no sense. If you look at the someone will be like, dude, is it double bottoming or something? Like from the same, May 20th low. No way, dude. Not based on the oscillators. You've just begun to build negative momentum and you're just sitting on the RSI at like 34.7. So there's plenty of downside before you're oversold. There's no bullish divergence and you have broken below supports indubitably. So that's how this index fund keeps dumping, right? From where you are right now, the downside potential is still like 6.3%. If you ever broke that level 125, look effing out. God. There's a gap fill at like 96 bucks. When it's all
Yeah,
said and done, that probably will be filled.
agreed. Agreed. And the other thing that when we do these big spreads, people, you have to understand that you are going to experience little sprout reactions off of your major levels. So this actually, Apple bottomed at the 382 off the COVID low at 133, and it did a little doink sprout reaction for 2 weeks and then rolls right back down. And
And
this
with the
is
S&P, yep.
like a stair step thing that you will see as we progress here into the summer months, and then you're going to get that kind of a phenomenon where you stair step zigzag down, and people are going to be buying at every inflection and say, oh, that's the bottom, that's the bottom, that's the bottom, until you get to 68 on the 886. You're on the dirty side of that distribution curve coming down with zero here to consider. And then again, we have to really ask ourselves, what was the last 10 years all about? What is quantitative easing other than a massive overinflation of equity values? And if we need to look at this of there's the bottom in 2008 at a split adjusted $2.55. All right, and there's only two lows that I'm going to measure from. It's the COVID low, which we know is bogus. I mean, bogus. COVID is
Yeah,
bogus.
artificially
Everything
inflated. I mean, just
artificial. Okay, the vaccines, the severity of it all.
yeah.
You want to put a vaccine in my kid? You come to my house, I'll punch you in the face. That's how. And I regret. I got a vaccine. I regret it. I regret it. Sorry, I know people that died from COVID, but they were older, and okay, maybe they could have benefited, but they didn't get the vaccines to them fast enough. And whatever that is, however position you take on it, whatever your take is on it, you have to understand the last 2 years is total fluff. And you're on the backside, downside of it, where from the market perspective, these cycles don't stop. And you draw your long term uptrends because that's where they always come back to anyway. So if it's Apple, your long term uptrend's $50, your 886 is 23. And so we get a little perspective too. Think about this in percentage. Even though Apple did the most incredible from $2 to 150, 60, whatever. Look, think percentages. And if we go back to the 2000 bear market, when Apple was trading at split adjusted $1, it doesn't matter because this was $50 and it went to $7. All right. And you might say, oh, well, it came back eventually. No. There's the 886. What are the patterns here? What is the M&W framework that will serve you well if you adhere and follow to it? That once we broke that 50 or that 382 zone, it was an acceleration, bam, bat action magnet move down to 27 cents. And that was only 20 years ago. That was 27 cents. Talk about crypto, but this is overinflated garbage. I don't care if it's Apple. This is how we get down to Dow 20,000, S&P to 2,000, if not worse. It
And
is,
just wait until it's not just Apple, man. It's the other big ones too, like Amazon. Like if you've seen that one, it's right back at that really scary $100 support from 2018 and pre-COVID crash. It's just like you break that, man, look left and see what could happen, you know?
yeah. And these are all decade phenomenons. So we're going to break this trend line on Amazon, and then you shoot the gap lower to your 886. And again, folks, uh, I don't want to dismiss opportunity. I want to be thinking in a constant opportunity stream. It's something Mark Douglas always taught me. No matter how bad it gets or how ugly or whatever, where's the opportunity? Where's the opportunity? Opportunity is shooting this downside. Whether we get a 1 day, 1 week recovery rally, whatever, maybe we get a flashback to the 382.
Good
But
God, man.
this would be
Just imagine.
something like this. Maybe and this is where the spreader ratios are going to help you. That at least I know the key levels. 115 on Amazon was a key level that it tried to hold. It failed. Next level, we're going to stair step down to the 50, maybe a little sprout up, back down. This is how we stair step. It's how it does it on the way up and the way down to where Amazon all time at $20, split adjusted. I'm sorry. I don't I will make these statements because I lived through this stuff before, and that's where we're headed. We've already kind of opened the Pandora's box, if you will, the BAM box, and this is how this thing will break down. If anyone tells you, "Oh, there's opportunity here," it's oversold. No, no, we need to see these majors get decimated.
So you were talking about like everything's artificial and all that. I posted a little cute cartoon that be cool to show because it's kind of perfect. Finally, though, it's like all the kiwi alcohol infused in that bull made that bull real drunk, right?
Yeah, yeah, and I look. There's a lot of stuff that uh, in my whole years of looking and decades of looking at the markets, folks, there's geopolitical things that have never happened before. I did live through the inflationary 70s, but this is worse. And we never had, at least back then, we weren't at 250% debt to GDP. We didn't
Yeah,
have a retiring baby boomer generation hitting this year, which is something that maybe
that's real bad.
I'll talk about tomorrow. There's major demographic cycles that say 2022 is when the boomers in mass are retiring and they're going to pull it out of the market so that they can live. And then you top it off with the administration. And I have no political favoritism one way or another. I'm pure. My politics are the market, but the current policy does not support the market in any way, and that's how you get the kind of the ingredients to have what we have today, which is full blown bear. You just have to admit to yourself how far down does it go. And let's just look at the Dow, because the Dow is this is the chief of, that's what they looked at in 29. At least you had a Dow index in 29 that the two measurements that I'm going to recommend everyone do from a simple retracement perspective is do your high to lows. Okay, 382 is 29,771. We probably get there this week. And the thing about the 382 is that these metrics have character. So maybe we come down to the 382 and we get a sprout and then we roll back over. But the real acceleration when you violate a 382, it's incredibly important. I talked about it in my first book. It was one of the first things I ever learned, that the 382 has a unique character. Okay, and if you can't hold a 382, chances are you're in for a much deeper retracement, 50 or most likely a 618 on this move as a minimum. But what happens is it happens more quickly. You might get a many bars once you top out to break it down, and it's maybe seems like a normal correction, but then if you violate it and you break down further, it happens faster, steeper, and then you make your way down. I really think 20,000 on the Dow is a likely target to basically recover the fluff, give back the fluff of the last 2 years, and then I will see if this is going to be something much lower. Because we had, if you go back to the last couple of corrective moves, I think 2008 for the Dow is much like the COVID situation, where you had a pretty steep move up, and then once you started breaking down, and again, just what I was saying, look at the character of the market at each level. You had on your 2008 move, you violate the trend line, you start the march to the 382, a little bit of a sprout rally that just goes up a little bit, and then the real acceleration begins into the 886 flush. And we're here. You're here currently today with the Dow with that much to go on the downside, another 50% drop to the 886. This is how this stuff plays out. It's not like I'm making this up. I'm not, it's like, oh, I'm just pulling these numbers out my butt. No. This is how this stuff breaks down on a harmonic level perspective. We want to look at the 886s as like a cycle reset, and this doesn't account for the last 10 years. It's just talking the last 2 years. And I think something, anything here of just admitting that this is a give back of the COVID rally. And in light of all the other things going on, I don't think anyone could really put up a good, solid argument against that. What's going to change that's going to make this long-term bull market continue from here? You're not even at a 382 off the COVID low at 29,770, and I think we're there. I think we drop another thousand. We could drop 1,000 tomorrow by Wednesday. I mean, that's where we are. And I've the thing that's bothered me since really April has been this nasty consecutive close of the week. Every Friday's been ugly, and now we're down 11 weeks in a row. Software is picking up. Oh, there's a deep crab pattern, but we're crashing into it. Another 1618 down from that March move up. That might have been the sell of the century. And then we come back down, another 1618. And then maybe we come up to a 382 and do another 1618. This is the harmonic stair step.
So disgusting, man. Saw the TLT, the 20-year Treasury bond ETF is at its lowest price since July 2014. What does that mean, really? I mean,
That's the
bonds crashing still.
I think that's the tips, right? Isn't that the tips inflation adjusted?
The TLT.
The TLT, or no, tips is different. TLT is the 20-year Treasury bond, which, yeah, I mean, and so this is where
Breaking
actually,
support.
this is a great one to segue to, where the 2000, let's go over here. Let's go to the bonds. This is where it starts to happen, folks. The bonds of how this thing definitely where interest rates become a real problem. You go to 10-year. Look at that, 333, and we have a hop level on this massive bat pattern up at 366. These are minimums, and 366 we go there now. One of the things that I mentioned before, we go to the monthly, that on the 10-year yield, okay, you had a crab pattern. We do have, and this one is a type 2. Look, there's your type
Okay.
1 shark pattern. Come back down for the hop at 93, their capitulation low all time. And then even if you're going off the crab, that says 392 on the yield for the 10-year, which you have ways to go. It's really something. And then we go historically. This is something that I've mentioned of, let's bring up the ratios. Let's do the spread of ratios all time. Okay, remember inflation. Okay, this is where inflation peaked in the early 80s. Our inflation numbers are higher than these current levels. Okay, and inflation and rates are intertwined. To be able to get caught up, you got to go much higher to get this. I mean, if they raised 100 or 200 basis points, we're still not even close. And interest rates on the 10-year, they got to go to 6. You got to go to double. And for me, that seems like the bear market's maybe halfway through, if that, and interest rates have to double from here at a minimum. These are all minimums before we see anything else. So these are metrics. These are measurements where the measurements tell the story. And I think anybody can do that. If you're not on TradingView, folks, please get TradingView because you can do the ratios themselves. And then get on Harmonic Trader. Go watch Mitch every night, and he'll show you how to do it. I'm here. I'll be here tomorrow. I'll be back too. But I just want to highlight the severity of this before anyone else tries to convince you that we're close to a buying opportunity because you're not. And if you're on crypto, you need to consider whether or not if you're going to like the fact that your brokerage is not going to let you access your coins, if you're not cold storage or your money. And it's the thing that blew me about, and I'll just finish up on Coinbase here, was that Coinbase, when they came out with their last quarterly earning, they said, well, just in case if we go bankrupt, the customer's money we're the custodian, so we're gonna have to hold it. And here's Coinbase. You're at a hop level at 52, $49, but you have no confirmation. I would have to say Coinbase, despite that pattern, goes to single digits.
How about Coinbase, like COIN?
COIN. I mean, you're
Yeah, it's down 11+% today.
11 plus percent, but not zero. I mean, nothing, total nothingness of you're going to fail the hop. And for what we do, for what I do on the software, we actually got a sell signal with that HSI at 80 bucks that this is amazing to think that Coinbase has lost 50% of its value from a week and a half ago. You were trading 80 and change. Now you're trading 52.
So bad.
That's a sign of further downside. So again, where are we at today? Where's the Dow here is
Everything kind of like went up and is going back down. Like Bitcoin on the 4 hours, like going red again. Like it's from Bitcoin's high on this 4 hour to where it is right now, it's down almost 4%. It's down $1,000 in maybe an hour, hour and a half
There
from
it
its
is.
top. So volatile. It's just like it's so bearish, so bad.
So that's
Like
liquid.
if you're playing this, you're crazy.
Yeah, liquidation. And I think you every day over day, what you're looking at here is just a day over day decline now, where no matter where your close is, doesn't matter. I'm going to say that the Bitcoin hits that hop level 19,750. We get there probably by tomorrow, and then we'll see if there's anything. But you and I said it Thursday night. We're looking for big red candles now, and it has begun. And it
Yeah, real, very real, nasty red candles. Like Microsoft's breaking like a parabolic uptrend. Oracle too. Intel. Oh my God, dude. Intel like breaking a demand line that goes back to 2009. I just posted that chart for you to see it.
let's pull that up.
And it already broke a massive like 6 year horizontal line support. So I mean it's just destroyed.
Let's see. This is let's see. Go back to that.
You see it?
Yeah, hold on. Let me get. I think I got the right one here. Oh, let me open the original so you can see this. Oh yeah, Intel. Intel hitting these trend lines. Intel at 42, but nothing there. And how can you make money, or how can you be any kind of growth if you can't even make the chips to sell? So
Yeah, I agree.
this becomes a kind of a reaffirming cycle.
Bottlenecks.
Yeah.
Definitely bottlenecks.
These trend lines are what to look for. The breakdown there, we see it. We've already seen it in a lot of those big tech concept. How's Kathy Wood doing?
Oh God, I can't even imagine. ARKK.
KK. That's
Might as well
probably
look at that next.
your poster child here.
Oh, it's
Whew.
at its lowest low. Like today, say it closes. Yeah, say it closed right now. Like, it would
30.
be the lowest daily candle close since the COVID crash in nadir. Lowest daily candle close since truly March 18th was the absolute bottom, the day of the bottom. So today would be that. That's kind of crazy.
The COVID low was 33 bucks. And here's a beautiful bat
Oh,
pattern,
it's
folks. And I'll be the first one to say any pattern without confirmation or context, especially, is just a doodle. And maybe a pause, a reaction at best, or a pause at worst, or a continuation. But this is where the other aspects of understanding how patterns come together, you can draw them manually, sure, and do your targets, but unless you have something happening in that zone, and look at how it enters the zone. I mean, arc is, and this is a monthly chart, my man. 1, 2, 3, 4, 5, 6, 7, 8 months, 8 months, 8 months serial down in your CD leg. This is NASDAQ about to happen, Dow about to happen. I think more like NASDAQ, where if you're NASDAQ, you're like here, breaking your B point, ready for the big caps to collapse into whatever. And I think the
Tesla too, because that's like a huge, like maybe one of the largest holdings for ARK. I think Tesla's going way further down. It's going to really affect this chart. I mean, that alone's going to make ARK break $36, which is the massive support. If it breaks $36, the downside on ARK is about 38%, like straight line down until $22, which takes you back to 2016 and 2015, near IPO.
Yeah, I think
God.
15. I got a hop level at 15, which I've been saying that, look, you can run the patterns, you can do the manual measurements, and everyone should learn the manual measurements and what it means. Mitch is doing that every night, and I mean, you do a great job in explaining all of that framework. If you want to follow what the auto-generated algos, which has been my focus for the last couple of years, to basically take the methodology and the standardization into the proper algorithms that can at least find the true harmonics. You still need confirmation, still need to use your brain a little bit, but when we get such a severe drawdown like we have, okay, you have to then target the lower overspill levels, which usually going to be your hop level, which is 15. I know that's crazy, but look, that's how I do what I do. It's not like I'm just saying, "Oh, it's just going to 15." No. If you've got the measured harmonic and it's failing, it's going to do a deep retest of that zone. You've got to anticipate as low as a possible hop, which is gives you 15. All-time 886 on this one is 31. You're trading 37. So what's that tell you? I mean, percentage-wise, another 20% lower, and that matters. You're already 80% off of the all-time high. And how many funds are sitting there looking at all of this saying, my God, before it goes to zero, what are we going to do? Because I don't think the funds have even capitulated out. Let me pull up Tesla.
No, they haven't, man. They haven't delevered. We're not above 40 yet. Hey, Bitcoin's at its low, the 4 hour. It's rolling over 23,100, but at the high today, it was at 24,200. Wow, over $1,000 down about an hour, hour and a half since I don't know, right before you started streaming, we were at 24.2.
Here's the other thing about a lot of these. There's Tesla, got a beautiful bat pattern off the top, failing, failing,
Oh, it
not
was perfect.
beautiful bat that gave you a little sprout reaction, and then nothing. Your 886 is 626, so you'll retest that probably today or tomorrow. But hop level on this bat is at 448. If that holds, and again, full reset, full harmonic reset,
Oh
886. If
my God,
if you
dude.
haven't heard of the 886, it's in my volume 2 book and you need to learn about it, but the 886 is at 178. They're going to
Yup.
split it 3 for 1, so that'll be 60.
They've already split it again. That's what's really concerning because there's no point in doing that unless it's just to get dumb money to buy it because they think the price is lower.
Yeah.
So crazy to do
Or
that.
conversely, people that have been holding Tesla that got more shares, they're going to be like, all right, maybe I should sell some now before it does go even further down because I don't know, people tend to lose sight of the proportional analysis, thinking of markets moving not in points but in percentages. And when we put all of this together, these percentages that we're looking at are all pointing lower, deeper, that is not a drawdown any of us really want to sit through. I personally been talking about this for a while. Oh, by the way, for all of my crew that give you a 529 update on my son, it has gone to cash. It went to cash on Friday. And that's supposed to be as conservative. It was whatever. I'm done. I'm so done that I have seen this before. And it's not like it's a huge hit, but I can't sit on my hands anymore and go through this with these kind of targets pointing lower. So just to let everyone know of the actions, the literal actions that I'm taking, that I'm that convinced of the severity of what we're going through, and it's only June. Okay, to get this kind of action during June is not normal historically. June is not a month we usually see massive drawdown, but what it really does mean is that if it's starting in June, what happens when we get to August, September, October?
Oh
Where
man.
where will you be?
Historically, death months. Yeah, I don't even know, man. It's so bad. Things are
It's
just collapsing.
Most of you folks haven't been through a bear market, and they've been through two of them, and not even the worst of them, like 74, like the old timers used to talk about 74. Like that was the end of the world. Mostly because what happened after 74 is you had a dead market for 8, 9 years. And it took 8, 9 years for asset prices to get back to where they were pre 74 crash. Um, I don't even, I worry about that. You had the perfect cycle of the COVID money, the COVID, the quantitative easing, then QE infinity, and then crypto, COVID. I'm sorry, even with the worst of wars and even in the Great Depression, you didn't have quite these scams. I mean, maybe 29, 29 had these level of scams where and no regulation. And if you don't think that the government's coming to regulate crypto, you're kidding yourself because with the shutdown of not letting people get to their money, the Do Kwans and the other people
Yeah, that
uh,
ruined the party, man, for everyone.
destroyed it. Your crypto paradise is gone. So
Yeah, we have no one to blame but ourselves, the people involved. Yep. You can't, this is why we can't have nice things. Perfect expression to use right here.
you can't. And I don't even I think history will not bode well for even Elon Musk, who has been on like the good guy side of a lot of things. And quite frankly, if that guy was as smart as he is and a smart guy, he would not buy Twitter because Twitter is a $10 stock. It's not a
Yeah.
$50 stock. Twitter is like a $10 stock. Here it is.
I think what he did though was wonderful because it made the crazy people try to cover their tracks, erase algorithms that they were using to suppress people and to shadow ban people because it was like, they were under audit and they had to, so it was just kind of exposing them and showing like what they were doing, the tactics they were using because they just disappeared like, days after he was announcing it and all that. So it was like a 4D chess move type thing, I
I
think.
yeah, I agree with that. I mean, just fundamentally, and I think that was more his aim. But I got beautiful patterns here that are in a type 2 return on Twitter that will take this thing to 26 or as low as 23 on this move. So this might be another opportunity. This is something for my crew that listen, I'm going to hone in on spots where if we can get counter trend rally, it's late for that, but if we can, let's say we can get some kind of respite to this breakdown, which is I don't have too many I don't have too many historical reference points to really nail down how bad of a breakdown this is, although it's extremely bad, now trading 37. But Twitter could be another one where, let's say on a 5 minute chart, we could get back to 39 or something. We're going to get probably some reflex rally, and then we're going to want to trash the puts. We're going to want to just load the puts for just a summer squeeze all the way down into September, October, and from a time perspective, which is one of the most difficult things about options because time premium is a real bear of like if you don't get the option trade right and your time premium is you get ground down, that can be difficult. But let's talk about July, August, September. 90 days gets us into September, maybe 120 days historically. Okay, we make lows. We make lows in October and we confirm them in November, which is a historical pattern. But all we need to do is capture the real meat of the move, which I think if we're going to get this massive breakdown on all of these monthly 886s on Twitter and the likes, where we're in a full harmonic reset, well, the meat of that move is going to come 90 days starting in the summer. Twitter's got $20 written all over it, so that's could be a nice thing to maybe let some of this ease up. This crazy day. Hopefully, we can get a day up tomorrow or next couple days, and then we pound them. And we pound with your out of the money puts, maybe by the 30s, looking for it to go to 21 by October in fast fashion. And those are going to be some of the plays that I'm going to be looking to do here with most of my money out of the market, crypto getting off the exchanges. I won't come back. I don't care. And I'm, now starting to call out some of these guys because where's Pompliano now? Where's Sailor now? What are you going to say, guys, when we go to Bitcoin 11,000 and you're liquidated and maybe you were a billionaire because you bought it at 5,000 and went to 60, but how much do you have now? How much will you have left? Because it seems like these guys want to go to the grave on this stuff. So be it. That's not how I trade. That's not how I've been able to survive through times like this, and we are in a times like these moment. So
Yeah, Michael Saylor, where is he? He said earlier in Bitcoin We Trust 5 hours ago. So, and he changed his profile pic. So that's cool, I guess.
what? No more laser eyes? What? Bloodshot
No,
red
they're
eyes?
like they're crazy yellow eyes, gold eyes now. I don't know.
Good for you.
Electricity around it. Yeah.
Look, I quit a hedge fund that I was consulting for crap like this. And I just give you guys a Scott story here for a second and wrap up. But I was consulting for a multi-billion-dollar hedge fund. This was like 2013, and I became integral in the decision making. And it was basically me and the chief economist at Goldman Sachs that this hedge fund advisor was listening to, and she had no clue. Sorry, I kind of outed her, but she didn't have a clue. And
It was
she's like,
Kathy? No, I'm just
no,
kidding.
no, 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 not Kathy,
I'm
but
messing with
no, a
you.
really sharp woman. It was offshore, but I was like, this is my chance. Okay, yeah, I'm going to connect with one of these people, and I've been lucky to interact with people like that. And I was like, good, I like to compete. What's this guy from Goldman saying? Chief economist, chief whatever. But the problem was is that I realized how little they did know. They didn't know harmonics. They didn't know measurements. The Goldman Sachs guys are like, well, we're not really sure. We're thinking maybe recession in 2014. And in 13, I was like, no way. You got to go Nasdaq, go hard Nasdaq, and Nasdaq was like 3,500 at the time. I was like, look, Nasdaq goes easily back to 5, 6,000, and I say you focus on the Nasdaq. But what blew me away is that they didn't know, and she did well. She got her. She look in '08, she lost half the fund. She started with four, it went to two, and then she got it back to four and a
Dang.
half. And she's like, well, maybe I'm thinking about cashing out because I've had it. She's like, I don't want to lose this again. And I'm like, no, you got to hit the gas. It's time to go. And and it was right, and she took it hard, and she ran with the advice, which was great. And then I was like, well, listen, our phone calls are great. A consulting fee is great, but I want more. I want to be involved with this, and I think we can do great things. The problem was they got selfish. She got you. Sorry, honey, you got selfish. I'm sorry, dear. You got selfish. You didn't let me in, and I quit. And so I've had my personal experience with these people that I know that they don't know. They don't know. And if you folks know technicals, you know harmonics, you know more than most of the people on the street. And I know that's difficult. Like, maybe you're just shilling, Scott. No, I know it firsthand. And these people don't understand what's happening. They're going to try to buy this market that will only delay the inevitable, which is your full 886 harmonic reset. So, and crypto, it's a dumpster fire. And you just need to understand, like, okay, do you have that money to lose? Do you really want to be part of the cult mentality, or do you want to be a trader that survives and then you can buy Bitcoin for a fraction of the amount and then start over? Because that's trading. Those are trading cycles. That's how all trading goes. It's just that this dirty side of the hurricane, which we are now on, is
Yep.
not a place that we get to. We get there once every 12, 15 years, maybe. This has been a delayed hurricane that should have happened probably in 2014 or 15 anyway, but it didn't. And then COVID exacerbated it all. And now it's payback time. And it's never too late, folks, to save the next lost dollar. Take that for what it is. But Mitch, you got anything to finish this out on?
Uh,
Take us
wait for an
home?
edge. Wait for an edge. Wait for like stronger supports. Wait for divergence on like the weekly and monthly, and wait for value areas, I guess. So it's just even if you catch rallies, tomorrow, the next day, they're all jokes. And really why you'll catch some face melting rallies intraday is because of the volatility and the illiquidity. You have elevated volatility and illiquid markets. It's a recipe for disaster and circuit breakers. It's just so little money needs to move the meter. I would be really careful, like because when the VIX is this high, bots are just traders. They don't invest. They don't long. They don't DCA. They wait and they just trade. And good luck trading against the bots. So I guess I could end it with that, you know.
Yeah, everybody join Mitch. Get over to his, subscribe to his channel. Mitch Ray TA is the place to go to be there. And then Mitch and I had a great session. I thought our May 5th was a flop, but our June, what was it? The June one, June whatever that was that we did,
Ninth, yeah, 90 stream on the
the 90
ninth.
stream. Yeah, so that was yeah, on the 9th. So Mitch and I did that just a couple last week, and this is what we were talking about. Here it is. So check that out because Mitch and I had a great stream there where we laid this out last week, calling for this now, and the big red candles are here. So check him out, please, everybody, and he'll be on tonight. So I'll let you go because I know you've been doing a lot of streaming the last 24 hours. But thank you for joining us, everybody. Thank you. And again,
Thanks
I'll
for
be
having me
back
on,
tomorrow,
man.
12 noon.
Yeah, man, it was a pleasure. It's always fun hanging out, shooting the S with you. That's what we do. That's what we love. And we found our passion in charts. Hopefully, if you're out there and you don't find the passion in charts, you find it in something in life. So,
Yep. All right. Well, join Mitch tonight. See me tomorrow, 12 noon, everybody. You know what to do. Go to Harmonic Trader for the rest. I don't even chill it. Just go. Just change your life there. Until then, see you tomorrow, folks. Thanks again, Mitch. Take care. We'll see you
yep.
at 12 noon
God
tomorrow.
bless.
Peace, everybody. Have a great one. And as always, go get 'em.